Hi everyone, Donna here with Bookkeeping Made Simple. I apologize for having my video so late today. I like to do these first thing in the morning when the makeup is fresh and the hair is fresh and I don't look like I have had a rough day. But today it was a little bit unavoidable and I don't even have both earrings in. Isn't that insane? I can't believe I did that. Took it off to answer the phone because it does hurt when you have big earrings and you have to lean your ear over. And my earbuds don't necessarily work with my phone all the time. Anyway, as I promised, today we're going to dive into the statement of cash flows. It's a little bit trickier to understand than the profit and loss and the balance sheet. Those are fairly straightforward. So is this, but there's a little bit more that goes into it here, particularly with understanding, really what's going on here. So with that, I'm going to go ahead and dig right in. As I am getting everything ready to share, I'm going to remind you that, as always, if you enjoy these videos, please like, share, subscribe, do the things, the great things, and that would be wonderful. Hit the red notification bell if you're on YouTube, blah, 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 blah. You know what to do. Okay, so we're going to go to the report section. This is a sample company. I know I keep harping on this. I know that, but YouTube has taken down some of my videos about reports because I made the mistake of using an actual company, even though I tried to blur things out. I want to really emphasize this is a non-existent sample company. This is for education purposes only. This company does not actually exist in the real world. So if you are a YouTube moderator, this is a sample. Okay, so to find the statement of cash flows, it's a little bit trickier inside of QuickBooks because here we have your favorites, AR aging, balance sheet, profit and losses, the things most people want to take a look at. The next section in the reports is business overview. And if you come all the way down here to the very, very, very last report that's referenced, you have the statement of cash flows. I recommend you star it so it goes to your favorites. Okay, I'm going to unpack all of this. So we have net income. This is, you notice there's three sections here. The first section is operating activities. This is cash flow that was generated because of the normal day-to-day operations of your business. Like I said, it's been a long day. I'm so sorry. So if you remember, this number, net income from operating activities, this should have flowed over from the profit and loss and the balance sheet, and now it comes over to the statement of cash flows. It is the same number, 1642.46. Now we have a negative number for accounts receivable. And you may look at that and say that makes no sense. Well, what that means is I have more money that's tied up waiting to be paid than I do that I have received money from. So in this case, I could have started out with no money in receivables, and I had billed $5,200 in receivables. That's what that is. This is money that you are waiting to be paid on. Okay. Now we have an inventory asset. That's the same thing. That was purchased on credit. We have accounts payable. This is money that you owe, but you haven't paid yet. And then same thing with you spent some money on your MasterCard, or you spent some money. I can't click onto these. We have MasterCard. We have Board of Equalization, which is a tax. We have loan payable. And so we have a positive here, negative, negative, positive. Positive means these are additions to cash. So we have money we owe to MasterCard. We have money we owe to Board of Equalization. We have money that came in from a loan, and we have money that is owed to us from accounts receivable. Okay. And now in investing activities, we have a truck. We bought a truck. This is an investment. This is if when you make these major purchases, it will show up in investing activities. And the negative means we can see that money flowed. It's not flowed out. It went out. And then down here in financing, we took out a loan for $25,000. And we have, again, accounts payable, opening balance equity is a wash account that we use to basically open new accounts. We have to have both sides of the transaction work. So that's the only reason that is there. This is what you need to see. So operating activities, we started with the, by the way, if this was a real company, we would also have a beginning cash balance, cash at the beginning of the period. You notice we do not. That's because it's a sample company and it only exists today, basically. It doesn't matter what I do in QuickBooks, it's going to reset as soon as I get back out of it here. So we have no beginning cash balance. We have net income. We have things that come out of net income and things that go into net income. So, and then our adjustments is by the time we do all of our adjustments, we have net cash provided by operating activities. So we have the 1642.46. We're going to add all of these up. It comes out to the 243.56, and that gives us $18.96 in net cash from operating activities. And then we have an outflow of $13,495 and an inflow of $25,000, an opening balance, which is non-cash usually. So we have cash provided by investing activities. That was the investment that we made in the truck. That's a negative. Money went out. We have cash provided by financing activities. That's a positive number. Money came in. So our net cash increase for the period is $4,063, and cash at the end of the period is $4,063. And remember, there was no beginning cash balance. If there had been a cash balance, a beginning balance up here, it would have said cash at beginning of the period up here at the top, and we would have added that together. So we would have had cash increase, and then we would have added that to the cash that we had at the beginning, and that would end up with our cash at the end of the period. Now I'm going to turn this off. I realize that's probably about as clear as mud. And I also realize that a lot of accounting things, unless you are very invested in your company, it's not necessarily terribly interesting, but it's important to know this, and that's why I'm doing these videos. The cash flow statement tells you where your money's coming from, and in this particular case, some money is coming from investing, some money is coming from operating just a little bit, but most of the money is coming through financing activities. So they are taking out loans to pay for things. In a real company, we would want to really dig in. Again, in a sample company, I can't drill down to see what transactions created that statement. But I do know things like the negative number for accounts receivable is there because they have billed more than they have gotten back. If it had been a positive number, that would have meant that all of their receivables got paid and they got all that money in, the cash came in. But because it's a negative, that means that it's sitting out there waiting to be paid, okay? Same thing with the inventory asset. We have $6,000 that is owed to us or that needs to be transferred. It's waiting to be paid. So, and operating, by the way, means it's the day-to-day operations of your business. As an accountant, my operations are the money I bill, the money I started off with, the money I bill, and any money other than credit card, which is financing, that I see on there. Now, you did notice that the credit cards are listed under operating activities. That's not always the case. Then we have financing is your loans, and investing is purchases of equipment and investor activity. So among other things that may show up in the investing section are, did you get money come in from an investor? Okay, that's an obvious one. Did your company pay dividends for that period? Did you put money into it from yourself? Are you investing in your business? Did you put money in from your personal accounts? And then under financing activities, and again, any investment in land, furniture, plant, property, equipment, anything like that, That's going to show up in investing because you're making this investment. And then under financing activities is going to be your loans. Excuse me, if you have a negative number on your loans, that means you've been paying them back. Your credit cards, or at least some of your credit cards, depending on kind of where they are. Long term, what has happened in this period to change? It's usually a year to date on the statement of cash flows, but you can narrow that down to quarter to date, week to date, today's date, whatever you want it to be. And this tells you where your money to run your business came from. If we see a lot of outflow in the financing section, that is a massive red flag. Tomorrow, I'm going to talk about how to bring all of these reports together and make them make sense so you really understand what's going on with the money in your business, the cash in your business. So we'll go over the cash flows again tomorrow. I did promise that this video would be up today, so I wanted to honor that. And that's going to be kind of it for today. Again, I apologize for the late video, but I did get it out. And looking forward to explaining how these 3 reports come together in a way that makes sense and help you understand what's going on in your business. Business ownership is the hardest job you will ever love, other than perhaps the Army. And I'm speaking as an Army brat. Business ownership is a hard job. It is a stressful job. It is difficult to do and do well, but it is the most rewarding thing other than raising my kids that I have ever done. And I'm looking forward to having kind of the same outcome. I have 5 wonderful kids, and I'm proud of every last one of them. So that's kind of it. Thanks, you guys. I appreciate you taking the time to watch your video, and I'm looking forward to talking to you again soon.